Another day, another dollar. This is AJ Academy, and today we're going to analyze these trades on GBP USD and another trade right here on gold, how we did take this trade. So today I'm going to teach you another strategy. If you haven't watched my previous videos, go watch it because that creates the base of this kind of strategy or this kind of entry model that I'm going to show you on how you could have taken these trades. And then I think we had already discussed on this trade, but we go on, and this is the trade that we've taken today, and then there is a second trade that you are anticipating to take. We're going to analyze right here because I'm waiting for the forward candle to close, and it's 10 minutes away from closing. So for these trades today, I'm not going to clear my charts because I still want to maintain these drawings or these structures. So what I'm going to do, it's just to take out these long positions or short positions, and then we can analyze and tell you how we did enter this trade. So remember to subscribe, like, and share. And if you want to join my mentorship program, it's the first session is starting today, and then the second cohort, it's on 9th of June. So just text me on my Telegram, and then I can add you on. So straight to the charts. Right here, this trade, which was 1:10. This was last week on Tuesday, if I'm not wrong. Yeah, this was last week on Tuesday. So how did we analyze this trade? So this strategy, we use the concept of fair value gap invalidation, not inversion, but invalidation, fair value gap invalidation. So that is the name of this strategy, or name of this entry model, fair value gap invalidation. So this trade, we took it on the forwards. So from the first analysis that you're going to do on this trade, you'll create an idea of these other trades, the two trades, and then the rest of the trades. So for this case, for the first trade, how did we enter this trade? So if you've been watching my previous videos, you know we use fair value gaps as our entry model, fair value gap mitigation rather as our entry model. So you could see price at this point. This is a fair value gap. This is on the forwards. This is a fair value gap mitigation, and we know that when a fair value gap has been mitigated, we should mark that, and then that fair value gap mitigation, if it gives us a break of structure, if we go to the line chart, we can see a tiny break of structure right here, because you can see this candle closing above the two candles. It's more of like a break of structure. So that fair value gap mitigation becomes what? It becomes our liquidity. So this is our liquidity, and we are expecting that we should mark a key level just below this liquidity, and then expect to buy from that level towards higher prices. But in this case, you should observe where is price coming from. So if I scale up to the daily, we saw prices coming from a higher time frame key level. Which key level is that? If I take this line, okay, let me mark with a new line. So this price action, where is it coming from? This price action is actually coming from this key level. At this point, you can see this key level had a rejection, was used as a resistance right here. Price closed above it. It used it as a support the second time. Price closed below and above it, and then it used it as a support. Price closed massively with this bearish momentum candle, and now the second time that this level is going to be used as a resistance, and you can see how price came, mitigated that level, and used it as a quite a well resistance. So this level has been used as a resistance. So that's why we need to invalidate that fair value gap, because now we are coming from a higher time frame key level. So bullish order flow is not going to hold. So we are bearish at this point. So if I go back to the forwards, now we've gotten an idea of we are coming from a higher time frame, bearish key level, point of interest. So the idea of using this level as our liquidity, it's not going to hold. Now, how are we going to use this level? That's just chill. I'm going to teach you a new way to enter or to use this invalidation for to your benefit. So we are going to capitalize more on the Fib level, so Fibonacci tool. So I'm going to take my Fibonacci tool. All these levels I've shared on my community, so if you want to you can reach me via Telegram. I can share them, or join my mentorship. You get them freely. So you just need to take your fib level, okay, the fib settings that I have, and then you mark that candle that mitigated that fair value gap. You mark it. Let me mark it. Exactly, you need to be precise. Once I've marked that candle, you can see I've marked that candle. We have different levels. This is the 50%, the yellow level is the 50%, and then this right here, it's about 70, 68. It's about 70 or 68 thereabout. So we are going to capitalize on these levels. So you can observe we have the extreme level, and then we have the second upper level. So we are going to use this second upper level, or just the level just above the 50% level of my fib levels. So once you've identified that level once you've marked that level, what you only need to wait for is the candle closure below those levels. So you can see we marked this as our liquidity, but what have we had this at this point? We've had a candle closure, a momentum bearish candle closure below that level. So once we've had that, this level becomes our point of interest, and how we are going to trade. We are not going to take direct entries. We're going to trickle down to lower time frames for confirmation, to check whether we have some point of interest that aligns well with that level. So from the 4 hours, we can go direct to 15 minutes time frame. So if I scale down to the 15 minutes time frame, this is the 15 minutes time frame. So what did I observe? I observed quite a good alignment of that key level. Why is that? You can see these kind of bearish engulfing candlestick. It signifies that we are bearish on that point of interest. Remember, those are the levels, the upper level just above the 50%, and on that point of interest, or the area that we are observing, we've had a key level which is a bearish engulfing candlestick. And if you've watched my previous videos, I've explained how we use the bearish engulfing candlestick. So we use the lower level, which is this one, and that level, I think I've marked it. This is the level, this is the line that signifies the this is the line right there. I marked it, and then we can now take out our fib tool, and then you can take your trade targeting the most immediate external low. But for this case, what did we target? We did target this Asian low. But why did we not place our target at this point? Because at this point we had this massive bullish engulfing candlestick. So where could be your target? It's at this upper level, and you can see that is the level that we had our TP, and that's how you could have taken this quite a nice good trade. Same case to the second level. How did we capitalize on this trade? I'm going to explain that. I think we found our key level on which time frame. Let me go to the 2 hours. So you need to be flexible with how you maneuver through the time frames, but the concept is the same. It works on all time frames, but always capitalize on these higher time frames. So on this time frame, what did we see? We had another fair value gap. Where is our fair value gap? Right here. I think you can see the place that I have highlighted. This is our fair value gap. Where is our mitigation to that fair value gap? You can see this is the mitigation. What did we say? Once a mitigation gives you a break of structure, if I go to the line chart, this is the mitigation, and then we can see we had a break of structure. Let me consult the candle chart. This is the mitigation. Once you've had your mitigation to a fair value gap, remember what we should do is find a key level that is below it, and then we can have buys. But for this case today, we are doing fair value gap invalidation setups. Why? Because it's not random, because price is coming from a high time frame key level, the daily level. It's a very strong level, so it's going to have a bearish order flow for quite some time. So this is the fair value gap this is the fair value gap that did what? That did invalidate our that we are observing, and we need this kind of price action, the bearish order flow, to invalidate this kind of fair value gap. So we mark that fair value gap. with our fib levels. The same case, it's just repeating what we just did. I'm going to mark, and I can extend these fib levels so that we can, okay, I think I've skipped this upper, but let's do this and then we can go back to this. So remember, this is the fair value gap, and which levels did we say we are going to observe? The levels that we're going to observe is the levels just above our what? Our 50% level, and that level, it's these at this point. So if I extend to this kind of price action, the bearish price action, where is that level? The level, it's quite, oh, it's right at this place. So let's scale. Once we've marked our level at the point of interest, the thing that we said, oh, what are we waiting for? We are waiting for price to close below this level. And we can see once price came to this level, it had quite a good rejection, but it closed massively on the second candle. We had this massive candle closure below it, making it our point of interest. So this is our point of interest. We don't enter on the 2 hours, we scale down to the 15 minutes. The same thing we replicate on this kind of trade. On the 15 minutes, do we see any point of interest? Remember, this is the candle closure that we had. It was massive. I think this was news because a single candle printed about how many pips? This is a currency here. It might not be much, but that is 32, about 33 pips on a single candle, quite some good pips. But this is our level that we need to observe. Remember, these 3 lines, these are our point of interest. But on the 15 minutes, we couldn't observe like quite a clear level. So we trickled further down to the 5 minutes. And I think on the 5 minutes, that's where we got our trade from. And on the 5 minutes, you can observe these amazing SBR. These are support that got invalidated by this candle closure, and it becomes now a resistance. You can see this was a support. It had been used a number of times. We had multiple rejections from that level, and then once price closed below, and then there was liquidity right here building above that level. And then this is the level that we marked with this red line. Let me take out my fib levels, and you can see we had quite a sniper entry at that point. Our stop loss about 6.1 pips. I've zoomed out, it's not quite a huge stop loss. And then where is our target? Our target, let's go to the 15 minutes. And okay, let's go to the 30 minutes so I can tell you where do we place our target and why did we place it at that point. Our target, remember, this is the trade we took from that point, and then our target is the most immediate external low. Where is our immediate external low? It's at this point, right there at that point. That was our target, and we got this 6.64 RR. For this second trade, for this second trade that I skipped, we did get this trade from 15 minutes, because I told you this strategy works across all time frames. You just need to be flexible, and then you just need to observe the direction of the market. The direction of the market or the trend, it's your friend. So once you've gotten the trend right, then you can just apply these on any market, on any time frame, and it will surely work. So on the 15 minutes, what did we see? To the left of the chart, we saw this kind of fair value gap. We can see this massive fair value gap, and we can see this mitigation. Once it was mitigated, it gave us a break of structure. So this fair value gap, this concept that you keep hearing me repeating, that the fair value gap mitigation into a fair value gap, it gives you a break of structure. It's something I've actually done on my previous videos. I've talked about them now and then, so I'll tag some videos right here where you go and watch that kind of entry model. And once you get it right and come to this video, it will be a lot easier for you. So we have this fair value gap mitigation, and it gave us a break of structure. Ideally, we should choose a key level just below this level and then take buys, but because we know we are coming from a higher time frame key level and we are on a bearish move, so we're not expecting to go and take buys at this level. So what are we going to do? We are going to wait for this invalidation, And how do you wait for that invalidation? We get to use these fib levels. The fib levels, you need to join my community to get them. Which candle do we mark? The candle that mitigated the fair value gap. I'm going to mark that candle. This is the candle that I mitigated. Let me zoom out and then explain again, because this is sort of clear. Which levels are we going to consider as our point of interest once we've marked the mitigation candle? Is the level just above the 50% levels. These are the three levels that we're going. I consider them as a single level. It's just that I've marked it with different fib levels, or rather coordinates. So we are going to observe what is going to happen at this level. Remember, ideally for us to mark this, we are expecting to sell from this level. For you to sell from this level, so we need to have candle closure below this level on that bearish order flow that is coming from the higher time frame key level. We need to close, we have body closure below these levels. Once we've had a body closure below these levels, and then now we can see if there is a point of interest or a key level that has been set or created at that level. So let me extend this to the right and then see what I'm explaining, or on the chart, what I've been explaining on the chart. So remember, this is it. Let me just move it further to the left, trying to be precise. Yeah, to the left at that point. Oh, okay, it's snapping. Yeah, at that point. So which levels are we observing? The levels that we said we are observing is this, the levels just above the 50%. Remember, the 50% I'm referring to is this yellow line. So this is the level. We've seen a reaction from it, or rather, before the reaction, we saw this massive candle closure below it. So it validates our level that we are actually going to use these levels to sell from. So what only we need to do is to just seek for a key level at that point and see whether we can whether we can do what, we can sell from that level. But if you consult to the left, we don't have actually a level inside that, a good key level inside that point of interest, or these levels. We don't have any key level. We don't have an SBR, RBS. We don't have an OCL, A level, and the V level. So what we do, we just need to wait for a confirmation entry. We need to take a confirmation entry. So this is the level. Let me just mark it randomly with an horizontal line so that I can take out these fib levels. They make the chart a bit clumsy, so I'm going to mark that, the middle, yeah, and then I'll take out the fib levels. So yeah, remember, this is our point of interest. How we going to take a confirmation entry? We've done what we call ranges. For the ranges, you can also consult my previous videos. I've done intensively about ranges. I've talked about them consistently and repetitively. So the ranges, for us to draw, we need to have this, what we call a sweep of the range, and then once this low is taken out, we call this a breakout. So this is the sweep and a breakout. What does it form? It forms a strong high because we are bearish. So this is a strong high that has been formed of this range, of this small higher time frame range. So what we need to do is to mark a key level, our point of interest. Do we have our point of interest after we've marked this range? Yes, we have this A level. And A levels on MSNR, it's a what? It's a resistance levels. It's a resistance level. So that's the resistance level that we are going to use to sell from. So I marked that resistance. I waited for price to retrace back to that area, entered a position, and where do you target? You target the lows, the most immediate lows. Where is our low, or where is that at this point? Right here. This was our target, and that's how you could have gotten a good trade, which is a 1:7.6 RR. You can see this thing actually works repetitively, like it's just for you to know the direction. Once you've known the direction, consequently you'll be taking just good trades. So I think we've done this, the third trade. Okay, let me go back to the 1 hour. Yeah, I think we've done the 3 trades. I hope you've understood. For the guys who want to master this strategy quite well, you can, as I mentioned earlier on the start of the video, having the second intake on 9th of June, only 10 slots, 4 remaining, but for the sessions, for the guys who joined on the first, which we are starting today on 7 p.m. GMT, we are starting our first session today for the new mentees. We are going to do the session. They get a platform to ask the questions and stuff. But if you are a sharp guy, you can actually master from YouTube, and you don't have to take the mentorship. But it's just a decision that you need to make. So for this kind of trade, why did we start buying from this level, or rather, why did we not mark more bearish order flow? So if I go back to the daily, remember I'm a day trader, so I don't swing trades, really, I don't. But well, I can have an opportunity to swing, but ideally I don't swing trade. So on this daily, or rather on this day, I saw this kind of rejection, and I was like, where is this rejection coming from? I needed to consult to the left of the chart. Remember, you need to observe where price is reacting from. And then I saw this level. Why did I choose this level? You can say it's random inside this chart or inside this price action, but it's not random. You can see what formed here. It's a bullish engulfing candlestick right here. This white candle engulfed this green candle. So what does it form? A bullish engulfing candlestick. And once it has formed, it signifies that a bullish buyers are going to enter in the market. And you can see here we had a rejection, but again we've had multiple rejections from those levels, and the last rejection we had from that level, it's this resistance. It was used as a resistance. Once it was used as a resistance, we've only had candle closures above and below. You can see above and then the below and then above, and it was never used again. You can see this, it barely mitigated that level. So once we had this kind of rejection, we knew that price is coming also, or rather price is reacting from a higher time frame key level. So what do? You scale down to lower time frame and see if you can get a trading opportunity. On the 4 hours I didn't see much, but on the 2 hours I saw something, and I think I've explained it. I've explained this trade on one of my videos, but just in a nutshell, let's explain how we did this trade. This trade I explained to the video that I said how to use bullish engulfing or bearish engulfing. So we can see right here on the 2 hours, after the reaction from the key level, we had a bullish engulfing candlestick at this point. So this is the candle that I've marked with the red line. And then how do you now, once you've had that kind of bullish engulfing candlestick forming, you can go to the 15 minutes for your entries. You can consult your lower time frame for your entries. On the 15 minutes, because we are bullish now, we can actually use now the fair value gap mitigation model to enter the market, because now it aligns with our what? It aligns with our trend. Remember the other trades, the other trades that I've explained, the 3 trades I was explaining, the fair value gap invalidation. But for this case, we're going to use the fair value gap entry model, where we have mitigation into a fair value gap. That mitigation gives us a breakout structure, as you can see right here, tiny breakout structure. And then now we need to find a key level just below that level, or rather just below that mitigation, and then take prices higher. Which was the key level just below? The key level was this OCL at this point, and then we marked. And then where is our target? The most immediate external highs, and this is the place that we marked our target, and that's how we had this 7.62. I've explained in detail this trade among my videos on YouTube, so I'm not going to take much time into it. But for today's trade, the 1st of June, we had this trade on GU. It was a 1:3. It was a 1:3. So this, I took it on the 2 hours. Was it on the 2 hours? Yes, on the 2 hours. I used the old MSNR, where we had this is a resistance level. We had multiple rejections from it, and then candle closed above it. So what does it become? a resistance becoming support. A resistance failed, it becomes a support. So that is an RBS. Basically, we waited for that RBS to be what? To be done what? The RBS. We had a reaction. We didn't take a direct entry from that level. So what we waited for rather, it's a price to close, to just have a reaction from that level and close above it, and just start invalidating the bearish order flow. So this is the first place that it invalidated a bearish order flow. You can see this OCL had quite a good rejection with this candle, but it failed to move it even lower. But we had this 2-hour candle closure above it. So once we had this candle closure above it, what we do is we scale down, not to the 1 hour, but rather to our entry time frame, which is the 15 minutes, and observe which key levels are we going to use on the 15 minutes. Which key level is right here. We had this level at this point. We had this level. This is the level I was interested in, but I had a feeling that I'm going to miss the trade if I place my orders at this point. So I placed my orders at this bearish engulfing candlestick. So I expected this bearish engulfing candlestick because it has been invalidated by this candle closure above it. So I expected price to react from it. So I went on a drawdown of about 1.6 pips. That's very minimal. So quite well, price mitigated, and it headed straight to our TP. Are we having any other entry for today? Yeah, on this GU still, we are observing this trade on GU. We are expecting price to actually push higher, because if I go back to the, is it the 4s? Yeah, 4s. On these 4s, now I want to explain something that we've already done. On the 4s, we are going to use the invalidation model that we did on the start of this video of the fair value gap. So we can see these our entry. Let me move that. We can see this is a mitigation to a fair value gap. You can see there is a fair value gap right here, and then we've had this kind of mitigation to that fair value gap. So what do? We take our fib levels. Remember, now this is a fair value gap invalidation. We take our fib levels, and then we can extend them to the right because we need to consult. So which key levels are we going to concentrate, or which key levels are we going to observe? These are the levels that we're going to observe right here. Remember, this was the bullish order flow, and then this is the bearish order flow. On the other end, we used the upper zones, but on the bearish order flow, we're going to use the lower zones. So these are the levels that we are going to observe. And what do we wait for? We need to wait for a candle closure, body closure above these levels. But you can see we've had quite a significant rejection, but we are still waiting for this 4-hour candle to close above it. Once it closes above it, we can look for a key level inside this place, and then this will be our first target. So we need to have a candle closure. So this is the kind of price action that I'm expecting. We have a candle closure above these levels. Once we have had a candle closure above these levels, inside these levels we should find our key level, and then we can take price up to that zone. So during New York, we are going to do so. If you can follow me on TikTok, I'm going to go live today, or I do go live, so you can observe how I live trade these kind of setups. So this is my expectation on this setup. It also works wonderfully, this setup, or this strategy that I've taught you. It also works quite well with a higher win rate on gold. We had a setup right here. Yeah, well, this is our target. Where did we target? We are targeting this Asian low. This is where we've placed our target, and we also have our point of interest right down below at this point. So how did we take this trade? The same model of fair value gap invalidation entry model. So on the 2 hours, was it the 2 hours or the 4 hours? Let me confirm. On the 2 hours, 4 hours, was it on the 2 hours? Well, it was on the 2 hours. Yeah, quite a good setup on the 2 hours. You can see we had this fair value gap at this point. This right here, it's a fair value gap, and then we've had this mitigation. what do? We mark the mitigation using our fib levels. This is the mitigation. I marked it using my fib levels, and then I can extend it to the right so that we can observe how we did take an entry from that. Which levels do we concentrate on? The levels are just above the level, just above what? Just above our the levels just above our 50% fib level, which is this yellow. So this is the level that we are interested in. And so what do you wait for it? What do you wait for? This is the fractal. You need to wait for candle closure below, body candle closure below that levels. We had this massive candle closure below, and what after you've gotten that closure, you go to lower time frames for your entry and observe, okay, let me take out these fib levels. It makes the charts messy, so that's just to identify. Remember, the fib levels are at this point. This is our point of interest. That's just a point of interest, and then we need to see if there is any point of interest that has been created at that point, or any level rather that has been created on that level. Do we have any level? On the 15 minutes we don't have quite a clear level, so I went to the 5 minutes. On the 5 minutes, yeah, I saw this level. It has been used by this mitigation, or rather by this week, but on the 3 minutes, that level becomes a QM, quite a nice QM. You can see we had rejection right here, and then we had a candle closure above and below, making it a fresh level. So the next time it's going to be used as a QM. So you can also watch my previous videos on how I mark my QMs. Yeah, there is a specific way I mark the QM. So this is the QM, and that's how I detect my trade. And we were targeting about 450 pips. Yeah, 450 pips, actually targeting this low. It's not like specific, we had a target of 450 pips, but we had a clear defined target of this Asian low, and that's why we are expecting price to get to this low, the Asian right here at the Asian low. But well, price missed our TP by how many pips? About 18 pips. This is goal, but we are patient. We are not we are still our stops are at this point right here at this week high. So we are anticipating that price is going actually to take out our TP. We are going to our full TP. Yeah, our full TP. So for my viewers, thank you. That's all. Remember to subscribe. Remember to engage with my content, and if you want to reach me, all my tags I'm going to mention them down on this video. You can check them on my profile. So peace out and have a profitable week and month. Bye bye.